Alright, oh, the video started. Alright guys, so today this video is for people that trade supply and demand, SMC. It doesn't matter if you guys trade fair value gaps, whatever you guys trade, does not matter whatsoever. I wanted to go ahead and I wanted to share with you guys today these two tips. Well, not really two, well technically, these two time frames that have changed my trading, and you're familiar with these time frames, I know, but these time frames are literally making things a lot easier for me, and I think they will literally change how you guys trade if you trade them the right way. So if you're, this video is specifically for supply and demand traders and also traders who are familiar with the fair value gap. I'm actually going to go ahead and show you guys. So the reason why I specifically stress the 4-hour time frame and time frames like that is because on those time frames you will see gaps, fair value gaps, supply and demand zones that you won't see on other time frames. For example, this is Australia Canadian dollar, right? And this is a forex pair. On the 4-hour, we can see here we have this order block. If you watch my channel and watch how I trade, I only trade two types of setups. I trade fair value gaps, which are my supply and demand zones, and I trade order blocks, which are also my supply and demand zones. And I only trade two to keep it simple. So right here, this zone is called an order block, and order blocks are basically engulfing two large engulfing candles that are filled with large sums of money, and they can be seen as injecting money into the market, because when you see these blocks, they are usually followed by unhealthy price action. So like right here, this one would be considered a bullish order block because we have this order block right here. We have the gray candle and the blue candle engulfing it, and then after that we have all this unhealthy price action. And these order blocks are used typically at lows and highs to either break new price levels and new highs and break new price lows. And they're usually created by smart money. Like I said in all my videos, smart money refers to the banks, institutions, and just traders that have the most capital. So they're looked at as the whales of the market, and no matter what market you're trading, futures, forex, Bitcoin, crypto. And these are basically, whenever you see these zones or these areas, you'll often find that price will actually come and retrace into these zones with a wick. And that's usually how I trade. So I only trade setups that have wicks like this. You see these little wicks? I only trade setups that have wicks like this because these show rejection. And once I see the wicks like that, I can either enter on that candle and see the wick form, or I can see the wick form and wait for some liquidity to break, like right here where I'm drawing that blue line. I can wait for some liquidity to break. And liquidity being broken is a good confirmation to your trade. So if you're looking for a setup and you find your trade setup, say you find a demand zone, and you're not so confident on that demand zone, you're not so confident of how valid that demand zone is, what you can actually do is you can be patient and wait for that demand zone to be broken with demand and volume. And once it's broken, that's showing you who's in control in that second, and that's showing you where the market wants to go. And so usually when new demand is broken and new highs or new lows are taken out, then there's usually a new demand zone, and you'll often see a gap there, supply and demand zone, order block, fair value gap. And so yeah guys, so the 4-hour time frame is I use for major gaps and major order blocks, and I use that time frame so I don't make sure I get stopped out, because on a smaller time frame it can look like it's bearish on like the 5 to 15 minute, and then on the 4-hour time frame it can look like it's bullish. So it's really about utilizing the 4-hour and a daily time frame and making sure you're not close or near major supply and demand levels that could potentially reverse from. Like right now, it can look like it's going down on the 1 minute, but since we're on the 4-hour, right now it's about to become bullish and break and take out all these people that think it's going to go bearish. So using the 4-hour and the daily time frame is important. And I know I didn't really get into the daily. I wanted to make this video quick, and yeah, I'm probably gonna make a part 2 to this video. Yeah, I'm gonna make a part 2 to this video. So this is gonna be a quick little part 1. Peace out. Yeah.